You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means we are back. Once again, it is Thursday. It is 1:30 p.m. Central. It is 2:30 p.m. Eastern. You know what's popping off in the world of futures options? Well, let's find out together, shall we? It is time for TWIFO. This Week in Futures Options. My name, of course, Mark Longo from theoptionsinsider.com, as well as from the network that continues to grow, adding not just one, not just two, but three new shows in the last, let's say, 6 to 8 months, somewhere in that time frame out there. Kicking it off with, of course, the Futures Rundown, which our guest today has been on a few times, as well as, of course, the European Market Brief and the latest edition just hitting a couple of weeks ago, the Hot Options Report. So thanks to all of you who've been checking all that fun out. Speaking of checking things out, today is your last day to check out the Pro if you want to get your name in the hat for the July Pro Trading Crate. The optionsinsider.com/pro is the place to go. That'll also get you in on the Options Oddity Show tomorrow after Vol Views, the official after party, if you will, of Volatility Views. Oddities 200, so should be a good time. Got a banger special guest joining us. All sorts of fun. The optionsinsider.com/pro is the place to go to check out all of that cool stuff. As we check out who's joining us on the old CME Group hot seat today, I am pleased to welcome back our old pal, Mr. Rich Excel. I said he's done a few moonlighting stops over there on Futures Rundown and even a Pro Q&A, but he hasn't been on this show in almost exactly a year. It was August 1st of 2024, the last time we chatted with him, when the upcoming carry trade meltdown was still a gleam in our eye. We didn't know much about it yet then, Mr. Rich. Welcome back to TWIFO, sir. It's been a while.
It has been a while. Yeah, that's a good memory on that. Yeah, the carry trade unwind. Now we're in the middle of what it seems like 60 days without a move of more than 1% in some of the markets, and no volatility. This couldn't be more different this summer versus last.
Yeah, now we're in, I guess, the punting the tariffs markets, banger earnings season, maybe markets out there as well. I guess you're too busy training the next generation of derivatives traders over there at the Hogwarts for derivatives traders to come on the show, sir. So I'm glad you could take a break from your defense against the dark arts classes to come join us, sir.
Yeah, the caravan around the world has slowed down for a couple of weeks.
That's true. You have been a globe traveler. So, listeners, if you want a guided tour of derivatives hotspots around the globe, then Rich might be your guy. Hit him up over there at the College of Business over there at U of I. Maybe you too can join a guided tour around the globe with Mr. Rich Excel as we continue our tour right on into the Movers and Shakers Report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, everybody, welcome to the Movers and Shakers Report out there this week. And kind of a surprising chart you might have assumed, given how everything has been, and a lot of the assets you folks watch out there have been gently drifting up, that you might have kind of a quiet, lazy, green biased week on our hands. But nope, when we run the numbers for all the big products lighting it up this week over there at CME Group, we're actually pretty heavily biased towards the red. I would say we're about 75-25, maybe 80-20 red over green. And of course, the largest percentage mover of the week is very aggressively to the downside. So a lot of red on the screen, which is kind of interesting, may come as a surprise to some of you out there. But Mr. Rich, it's been a year, pretty much exactly since you joined us. So you'd be forgiven for not remembering how the show works. So you think you can handle walking the folks through a little bit of light side or dark side, or am I asking too much?
No, I don't think that's okay. I think I could try to figure it out. But like you said,
shake off the cobwebs.
Exactly. Shake off the cobwebs for sure. I think we should start on the dark side. Like you said, there's a lot of things moving to the dark side this week, which is probably surprising to quite a few people. And number 5 on the dark side, we have the materials industry index. They're down about 3.8%. Perhaps being driven by some of the other things we're seeing as a number of the other commodities or inputs are coming down lower, and so I think the stocks that are levered to that have also definitely fallen because they're seeing their pricing power go away. Number 4 to the dark side, you have soybeans. The ag complex is, I think, always an interesting place to look. Maybe we're ignoring tariffs quite a bit. Soybeans are definitely a bit of that kind of the pawn in the tariff game, because whether China will buy soybeans or not, we haven't seen them yet step in to make any purchases here in either the old crop or the new crop. And a lot, I know there's been the synthetic aviation fuel and soybean oil, et cetera, has kind of filled in the void a little bit, but still, I think soybeans being driven by that China news, and so we'll have to wait and see what happens there. Number 3 on the dark side, silver. This one hurts because I'm long silver, and so seeing that down number 3 in the week, that one leaves a mark. It had been on quite the tear. Really started.
I was going to say, you can't be too angry. You're still having a pretty good year, sir.
Still having a pretty good year in it, but it always hurts to give a little bit back. Bulls make money, bears make money, and pigs get slaughtered. I guess maybe I was too much of a pig.
That was our theme on the Futures Rundown yesterday. It was a week for the metals to give back, but no one's playing a big violin for them because they're still dominating our top 5 for the year, sir.
They certainly are, and right there with them on the number 2 spot is platinum. So silver and platinum kind of go hand in hand. Platinum a little bit more volatile, down 8.48% this week, and then the big mover to the downside, yet another metal. Probably a little bit more specific, probably a little bit related. Copper down over 25%. Most of it happening in the last couple of days as the copper tariffs, which had driven the U.S. copper relative to London copper to such a wide spread, completely corrected as finished goods were not going to be included in those tariffs, which is where most people are trading the copper anyway. And so we saw all of that spread really get given back between the U.S. and rest of the world in copper, and that's the big mover we see in the CME copper to the downside this week.
Yeah, that's pretty wild. I have a feeling we'll be chatting about copper in a little bit, sir. But before we get there, what is moving and shaking to the light side this week?
Related to some of these moves lower in commodity prices, but number 5 to the light side is the 30-year Ultra, up about 1.45%. It is interesting to see the bond market still kind of hanging in there, even though the short end of the curve seems to be pricing out some rate cuts. You're certainly seeing the long end, so you're seeing a little bit a flattening of the curve going on here, certainly at the very long end, a 30-year Ultra. Number 4 to the light side, lumber, 3.68% to the upside. A little bit surprising. The housing data that we've been getting seems to still be a little bit underwater. Lumber is obviously really tied to that. We also had some Canadian U.S. tariff trade kind of rumblings and negative news today. Lumber is a big player there, so that's kind of interesting to see it trading to the upside. Number three to the light side is crude, up 4.48%. It was a big mover to the downside or dark side last week. Perhaps we're seeing in the crude complex here at the top of the stack, maybe because of the Russia, India, energy sanctions, things of that nature. Again, it's always geopolitics, it seems, these days. Number two to the light side is Brent, up 4.77. Brent and WTI continue to be trade hand in hand. The Europeans are, going to be more impacted by that Russia-India news, and Brent is obviously what they're trading. So that was the catalyst really there. And then number one to the light side is RBOB. Gasoline up 5.73%. It was down big last week. Maybe who knows what's driving that? Obviously, oil prices moving up don't help it. Perhaps we're getting past the summer driving season here as well, which is and so I'm kind of surprised to see a little bit on the light side.
Yeah, interesting action on the energy. So we got energy kind of dominating the light side this week with a smattering of lumber and a little bit of rates thrown into the dark side. It's kind of all metals all the time with a little bit of beans and the materials sector of the S&P as well. So a lot to sink our teeth into there. Before we get there, listeners, let's fire up a little bit of the old CVOL report, see what's moving and shaking out there. Remember, you can run these reports for yourselves. Just type CME and CVOL into literally any browser. I can't speak for Sleipner, but probably Sleipner as well. And then you too can run these reports for yourselves. Set your high-low range to 1 week if you're listening right about when the show comes out or a little bit after. And then you want to go to the aggregates tab. And then you too can play along with the CVOL game here. The top of our list, we have the aggregate energy CVOL listeners. By the way, we have another interesting week where we're kind of splitting the numbers. Close to half are pinning the needle to the upside from a CVOL perspective, and the rest are pinning the needle to the downside. So kind of an interesting split on the vol front this week. Energy topping our list, 55.85 today, up $1.50 just today. So as Rich mentioned, we're seeing a little bit of interesting action out there to the upside in energy, and obviously that's leading to a little bit of juice in the energy sector. That is the high for the week, the low 49.98. So nearly a 6-point move to the upside in energy CVOL over the week, which is pretty aggressive. Below it, we have the aggregate commodities CVOL, 37.14, up about a point today. That is also the high for the week, the low 34.25, so nearly a 3-point rally in aggregate commodities CVOL for the week as well. And then below it, we have the aggregate ags CVOL, 19.21, up nearly half a point just today. That is the high for the week, the low 1869. And that's it for the gainers for the week. Everything else kind of pinning the needle to the downside. Like the metals vol actually coming back to earth a little bit, even though it is ticking up today, 18.18, up about 1/4 point today. That's slightly off the low of about 17.94 for the week, the high 19.91. So obviously metals vol kind of heading lower for the week out here. I guess all these sell-offs crushing a little bit of the vol out there. Below it, we have the price vol for the Treasury complex. And again, it was Fed week, so you'd probably be forgiven for expecting vol to come back to earth in the Treasury complex a little bit. And that's kind of what we saw, even though it's only 1/4 point net move. So not a huge move, but then again, it is Treasury. So they're starting at about a 6 handle. So it's given up 0.2 point just today. 5 3/4 is where we're hanging out. The high was 5.95. So pretty much all that move coming today, which is kind of fascinating. Below it, we have Rich's old stomping grounds, the FX CVOL. 7.85 today, off about 1/4 point out there as well. That is the low for the week, the high 8.25. And then bringing up the rear on our list today, we have the Treasury yield vol, also moving aggressively this week. 102.11 is where it's hanging out right now, off about 3.5 points today. That is the low level for the week, the high 105.59 out there in the Treasury yield vol. So again, some interesting action out there on the CVOL front. Also interesting price action in the movers and shakers, but I think we have to start it off in the complex that is dominating the dark side this week. Rich doesn't want to do it, but we're going there anyway. We're going to the metals.
Werewolves beware. It's time to explore the options activity in silver, gold, and other shiny things. It's time to talk metals.
All right, everybody, welcome to the metals. We're going to kick things off out here. By the way, of course, you folks can run these reports for yourselves. Go to cmegroup.com, I should say, and then hit the /TWIFO page, /TWIO, TWIO. Should also work. That'll get you to these reports. Then you're going to go into the asset class drop down. You're going to go all the way to the bottom of the list to metals. And then normally we kick things off in precious, but I think we're going to go base today because it is just a monster to the dark side this week. Copper off 25%. As Rich alluded to, it's kind of all tariff driven. Tariffs giveth and tariffs taketh away, and they are doing the latter this week. For size, again, 25%. Putting up some numbers out there as well. 77,000 contracts on the tape. So I've said it before, I hate to repeat myself, but when we first started the show, copper was, let's say, a very thin options product. Wasn't really retail friendly. Now you're putting up nearly 100,000 contracts. Granted, this is a bit of an aberrant week, but still, there's enough flow out there where if you as a retail trader want to get out and dabble in a little bit of copper options, you can do so without getting run over right now. By the way, where is the copper future hanging out? That front future, 439, off about $1.40 or about 24%. Again, just since Monday. So that shows you all of this move pretty much coming this week, as Rich alluded to. So, Rich, we don't get a chance to talk copper a lot, but it is kind of inescapable out there. What, if anything, is catching your eye in the base metals this week, sir?
Yeah, I mean, it's definitely got to be copper because I think that's the one where we're looking at it and we're trying to me, I've been thinking about it and saying, okay, well, the equity market certainly seems to think that the economy is doing just fine. The bond market probably has a different opinion. So who's going to break the tie? Well, it's going to be the commodity market. And if you want to understand what the commodity market thinks about the global economy, you got to look to the copper market. And so, trying to get a signal from that copper market because it's used in basically everything from plumbing to electrical. It's been tough with the tariff news and with the spread, like I said, the spread between CME copper and London-based copper. Like have we been getting negative signaling? And it looked like maybe the commodity market was giving us an agreement with the equities, but positive global growth. But that was probably just a little bit of tariff noise. And now if you look at copper and oil and a lot of the commodities relative to gold to take out the FX impacts, they're looking like they're probably a little bit more in agreement with the bond market that we're about to face a little bit of a slowdown here in global growth in the second half. And I think that's something worth keeping an eye on right now because it's going to impact a lot of the other things we see in the rates market and then potentially in the equity market.
Yeah, you're right. If you watch just equities, Rich, people will be surprised to hear this show. They'll think, what could possibly be wrong with the world? The equities just put up green numbers every day, exception of today. It seemed like we're starting to turn a little bit to the dark side today. And but yeah, if you're listening to the show today here, listeners, it may come as a surprise to you that there are some things that are red out there, including copper, as Rich alluded to, kind of a bellwether for many things around the globe. The strength and health of our economy, the strength and health of the Chinese economy. Copper is an indicator for many things and looking pretty spicy to the downside this week. Let's go out. Let's see. Nearly half of that paper, 48%, going up in the SEP contract. Has about 26 days to go. It is kind of refreshing to sink our teeth into a contract that has more than, let's say, 12 to 24 hours to go, Rich. This market is so near-dated biased. It used to be on this show, our cutoff was we didn't analyze really anything below 2 weeks because that was just noise. That was just gamma. And now here we are. That's the entirety of the market. But it's kind of refreshing. Yeah, it's kind of refreshing to sink our teeth into something that's nearly 30 days to go here. That's where we're hanging out in copper today. What is the vol? You might be asking yourself in copper. It's at about a 24 and a quarter, crashing back to earth off nearly 14 points this week. That's also probably to blame for a little bit of what we're seeing out there on the metals CVOL. It's just sucking everything down with it. Skew-wise, last week, obviously there was a bid to the calls. Not quite as aggressive as the near-dated stuff. The bid to the calls ahead of the SEP expiration cycle, so going out even 25 days and earlier, was just extreme last week, listeners. Again, makes sense. We saw these massive tariff-induced moves. The calls with about the contract 19 days to go right now, we're nearly 40% bid. 18 days to go from right now, 33.2% bid, 34.5%. These are premiums over the at-the-money vol, which was in self-inflated last week. So these are wild numbers, but that's what's going to happen, listeners, when you've got tariffs running the game. Spoiler alert, all of that is gone now across the entirety of the term structure. In fact, I'm hard-pressed to find a bid for any calls out here this week. They're all 4 to 5% discounted now. So they've swung from 30 to 35 to 40% bid above the at-the-money vol in terms of premium to a 4 to 5% discount. So you're talking 30 to 40% swings in this upside call skew, which again is just wild. Also last week, nobody wanted to touch a freaking put. They were 22% discounted, 24% discounted. So they were selling puts, they were buying calls. Again, that's what happens when you see these artificial distortions like tariffs gumming up the works. Of course, people are going to sell puts and buy calls. That's the game. This week, puts are bid, 4.2% bid. So wild, absolutely wild swings out here in copper over the past week. Even if you're just listening to the show, if you don't regularly fire up the CVOL reports, or indeed, in this case, the TWIFO reports to see this for yourselves, you should do it this week. Just pull up the TWIFO report, go to the metals, go down to base, and check out what's been going on in copper, because it's very rare that we get these dramatic of a swing. And it's a good opportunity to kind of see what the TWIFO report can show you and how useful it can be when a product is going around like a chicken with its head cut off. Just absolutely wild stuff. All that said, all this action, all these bids to the calls, discounts to the puts, all of that swinging completely the other way this week. The leading contract out here this week, the most active contract, it wasn't a 4 put or a 4.5 put or 5 put or whatever, 5.5 put like you might expect given this crashing back to earth that we've seen in copper. No, it was actually the 6 calls out in September, which again is kind of wild. If this call wing is to be believed, then you think people would be annihilating the hell out of those. But the big day was actually yesterday, Wednesday, 2100, actually opening slightly, which is kind of weird. So were folks aggressively overwriting? I can't imagine folks were leaping in to buy these SEP 6 calls with copper falling out of bed and this call wing getting absolutely annihilated. That would be odd. Again, we've seen stranger things, but 700 going up on Monday, closing there. That's probably just hitting the bid, get me the hell out of Dodge. Only 335 going up today against an OI of 2,700. If you're wondering, yesterday when these things were trading fast and furious, what was a SEP 6 call going for? It was going for about 8.5 cents. So between 8 and 9 cents, obviously. So not much. They had already lost most of their value. So if you were scrambling to sell them and get the hell out of Dodge, you were trying to just really recoup what little scraps you could left on this trade. I guess if you were buying them for between 8 and 9 cents, you were really rolling the bones that the tariffs are not quite done yet. I suppose anything could happen out there, but some wild prints. I don't know, Rich, when you saw these numbers here today, you saw copper falling 25%, hanging out in the 4 handle. You see the skew getting annihilated. Did you have these SEP 6 calls on your bingo card today, sir?
I did not, but I'm with you. It's a head scratcher. Why, especially when you're seeing it opening? Yeah, I don't know. My gut might suggest that perhaps people, as the future's starting to fall, are getting aggressive. They're selling futures, maybe even going short futures, and just saying their risk manager comes over and taps them on the shoulder and says, "Hey, you might need a little bit of protection, so maybe buy some of those calls opening against that short futures position." That's the only thing that really makes the most sense to me. I'm not saying that's what happened, but that would make sense to me if something like that happened and a trader be like, okay, I can just spend 8 or 9 cents and just kind of cover my extreme tail risk, and the risk manager goes away. Other than that, I'm not so sure, because as we know, even if the tariffs come back, it's probably diminishing marginal returns, and we won't get as big a move to the upside as we did before.
Yeah, it's going to be hard. Heavy lift to threaten that 6 strike again, but someone's trading for size on that 6 strike. Is that you, listeners? You rolling the bones for between 8 and 9 cents? Hit us up, let us know. Rich, we'll go out to your beloved silver next out here. Silver, as Rich alluded to, listeners, giving a little bit back. You can't be collecting every week, listeners. You got to give a little bit back to the market gods every now and then. And this week, it is silver's turn. Silver, that front future, 36.78, off about $1.60 or a little over 4, about 4.1%. Of course, you go back to the end of our show last week, it's off about exactly 6%, putting it at number 3 for our dark side movers this week. So silver's been an interesting beast this year. Like I mentioned, it's had a good year. For a while there, a lot of our silver bulls, Rich, I didn't know you were a silver guy. I'll have to add you to the list. I know Uncle Mike, a big silver bull. A lot of our chat like silver as well. They were lamenting when gold was at 3,500 new all-time highs and silver was selling off. They were very upset about that. Of course, we saw gold sell off and then silver catch up and then keep moving to the upside. So the silver bulls have had a good run out there. But this week, giving some of that back. By the way, if you want to compare products, everyone talks silver all the time. You don't talk copper as much, but volume-wise, copper is smoking silver this week, nearly 2x, about 38,000 contracts on the tape for copper right now versus 70,000 out there for silver right now versus 70,000 in copper. So copper stealing a march on silver right now. Dare I say it? Is that going to become the number two metal out there? Volume-wise, it certainly is this week. Rich, tell us your long sordid tale. When did you get into silver, and what are your thoughts on this sell-off, sir?
Yeah, for sure. So silver, to me, silver, there's two elements to it. It's always, it's always the laggard to gold. So it'll catch up to a gold move at some point. So you got that precious metal aspect to it. Not always leading it, typically lagging it. But then I think the other thing about silver has got obviously a much bigger industrial component to it. And so it's got a global growth component to it. So when copper took off too, and so now you've got, you had that big precious metals move, then you had the big kind of copper industrial metal, base metal move. And you're like, well, how is silver not, catching up? And so I think that to me, you always have taking a look at it, but to me, it was, looking back the last couple months and saying, what's been lagging? Why is it lagging? And is it going to catch up? And whether that be silver or ether or small cap stocks, it's looking for those laggards to try to catch up. And silver was definitely the first one to look at.
Ether, definitely in that conversation as well. We were talking about that a lot on the futures rundown. Maybe the comeback story of the year so far, Rich. We'll see. We'll see if it can continue. But right now, defying a lot of the skeptics and cynics that were out there just a month or two who were washing their hands of ether and now roaring back to life with a vengeance. Maybe we'll get there a little bit later. If you want some detailed talk on ether, we hit it, of course, on the crypto rundown on Monday and yesterday on the futures rundown with our good buddy Dan the Man Grams talking about a lot of ether. It's inescapable out there right now on the futures side. What's inescapable right now on the silver side, listeners? Like we said, nearly 40,000 contracts on the tape. Once again, we're going out to September, where a little over half, 52% of the paper is going up out there this week. What is the vol right now in September silver? Right about a 23, off about 2.25 points, which is kind of, again, in line with what we're seeing out there on the metals CVOL. Vol coming back to earth kind of across the board. Skew-wise, obviously nowhere near as dramatic, or some might say as insane, as the swings we saw in copper. Copper, that skew swing is up there in terms of the dynamics we profiled on this show over the years. That's pretty wild. Silver can't really hang with that. It was 3.2% bid with the calls last week. Nearly 5% bid this week. So I guess if you want to take heart a little bit, silver bulls, maybe the skew starting to lean towards silver turning back around again. That said, precious metals are usually bid to the upside, so I wouldn't read too much into that. But if you're looking for a little bit of a ray of optimism, a glimmer of hope, perhaps that is your huckleberry. The puts last week, 1% discounted. This week, about 3% discounted. So puts getting cheaper, calls getting more bid. Options kind of subtly leaning towards maybe a little bit of upside momentum, but we shall see how that plays out. That said, the hot option out here this week, listeners, in silver was the 35 put in September. So again, kind of racing towards that strike a little bit this week. About $1.80 away from it right now. Makes some sense. We'd see some folks piling into that. Trading about a little over 500 pretty much every day this week with the exception of Tuesday. Opening all week long. The OI on this strike about 1,100 right now. So it looks like folks have been piling into these 35 puts. I don't know, Rich, 35 puts with about 26 days to go. Is that too cynical for you? I think silver can break that strike by then. What are your thoughts on these puts, sir?
It's too cynical for me. I think if it wasn't such a discount, I would be looking to sell those, to be honest with you. I think I don't think at such a discount. I don't know if it's that attractive as a way to underwrite and ease into a long, but I think it's a little too cynical.
Yeah, they're trading for about 21 cents. So if you're selling them, you're not getting much. But yeah, if you think you're going to bounce off that, then perhaps that is a sale you like. Listeners, by the way, SEP 40 calls trading around a similar price level out there, about 24 cents. So you could sell the SEP 35 puts and do that risk reversal, buy the 40 calls, Mr. Rich, and do it for close to even money. Is that float your boat, or is 40 too much on the upside for you as well?
It's also probably a little too much, but I tell you, that's not a bad way to look at a zero cost risk reversal. Doing something like that. I think that could make some sense.
All right, Mr. Rich, we got base with copper. We got into your beloved silver. Any other metals catching your eye? You want to roll on to another complex? I'll let you choose where we go next, sir.
Well, Mark, I can't come on a show and not talk about FX. But why don't we?
All right.
We go there.
All right, to the land of FX we go, listeners.
The dollar, the euro, the yen, and more. It's time to explore what's happening in major currency options around the world. It's time to talk FX.
All right, listeners, to the world of FX we go. Pop out of that metals asset class on the TWIFO report. You're going to go up 2 more slots to foreign exchange, and usually we're going to hang out in FX majors. That's kind of where the action is. Speaking of action in the FX majors, Mr. Rich, you've been busy since the last time I chatted with you. You put up an interesting report on the CME website just last week, hedging currency risk with the Euro USD futures, and talking about some of the CVOL action you're seeing out there in the Euro USD. So let's start there, break down that report for our listeners who may have missed it, and then B, what else is catching your eye in the world of FX this week, sir?
Yeah, I'm on a mission to make FX cool again, and I think I've definitely seen that. There's an interesting article in I think it was the FT I saw where the retail traders in London are trading a lot more FX on a leverage basis, which is kind of interesting to see. But the report that I looked at for the CME for the Excel with options was looking at the euro. FX goes a lot of years where it doesn't really have much in the way of movement. This year has been a really big year for FX, right? The dollar has been devaluing relative to a lot of the currencies, and the euro, namely among them, right? The euro has really rallied pretty sharply against the dollar this year. And so I took a look at it and said, okay, well, what's going on? What's driving that? Will that continue to happen, or are we about to look for potentially a reversal? And some of the things I looked at to say, okay, let's look at the movement of the euro-dollar currency pair and some of the other potential historic drivers, short-term interest rate differentials, 2-year rate differentials, looking at that, and the currency pair had moved a lot more than the rate differentials would have suggested, which was kind of interesting. That doesn't mean that they always have to stay stay tightly paired together, but that co-movement makes a lot of sense. And typically when you see that, when you see a big gap opening up, it's not going to last forever. It doesn't have to revert immediately, but it's a yellow flag. And so the one thing though that does a much better job in the short term of saying, is there something here, is looking at the economic surprises in each of the countries, or each of the areas, I should say. The economic surprise in Europe versus the U.S. Now, this is not the absolute data. This is where the data is coming in relative to what the economists expect. And so if the data is coming in worse than expected, you're going to see that economic surprise index moving lower. If it's coming in better than expected, it's going to be moving higher. It's a very mean reverting index, both of them. I compare the two of them and took a ratio of them. And when you look at that, when you look at the relative data in Europe versus the relative data in the U.S., on a short-term basis, it plots very, very nicely versus that currency pair. And it's rolling over and heading lower. So U.S. data, as we know, has been coming in a little bit better than expected. European data has been disappointing on the downside, and this was suggesting that maybe there's something to do on the downside of euro here. Of course, it's Excel with options, and so we always want to try to express our views using the options market. So go to the CVOL index and look at both, not just the headline index, but the skew ratio, which is, it's really looking at up VAR versus down VAR. It's looking at the demand of upside options versus the demand of downside options. And FX, much like you were talking about in copper, foreign exchange is one of those really fun products where the skew moves around, right? There's that it's not a fixed, like we see in the equity market, the rates market, where one side of the distribution is always bid over the other side. In FX, it moves around quite a bit. And what we had seen is that the CVOL was had come back off the highs, was really in the middle of the range. So from that standpoint, the vol wasn't really giving you a huge signal, but the skew was really kind of getting set up to where people, even though vols had come down, skew was still pretty bid, which is telling you the market is still thinking that the currency pair was going to continue to go higher. And that's just something to where you're like, okay, well, if I think the currency might be heading lower, and we know that the skew will switch if it does head lower, this might be presenting an opportunity. I took a look at, normally we would say, well, FX, it doesn't really trade much, et cetera. Actually, open interest in the euro has been moving up quite a bit. Open interest and volume have been moving up quite a bit this year. And so there's definitely a tradability to this product. And so wrapping it all up, I looked at it from two different angles. I looked at it, what if you're long, as a lot of people might be, because it's been a pretty big trending move, what will be a good hedge? But you could actually do the same exact trade on a zero cost basis if you didn't have a position, if you want to just speculate on the downside. And what I was looking at was selling a 118 call going out for about, I was going out to the end of July. That is a Wednesday weekly out to the end of July. And by using that premium to buy two of the 116 puts on a zero cost basis. If you're long, it's a really nice hedge. It actually hedges you within that range. And if you go below 116, it starts to turn around for you. And if you have willing to take on a little bit of risk and willing to fade that upside, it really sets up as a nice way to play the short side using options instead of just shorting the futures. And so taking what the market gives you, right? That's always going to help you out. If you look at what the market's giving you, especially if you're a little contrarian, if you don't necessarily agree. And I think the data, the macro data, the dislocation versus the interest rate differentials was giving us really a trade to the downside in a euro that I thought made a lot of sense, whether you're already long or whether it's a new position.
Yeah, it's interesting. I'm looking here. It seems like the market agrees with you. I'm looking at some of the trades that are going up here. And I like that, though. A bit of a ratio 1x2 collar, sir. That's kind of interesting. I like that out there. You always have a funky construction that you're putting on out there. This time, ratio to the downside. You like that, listeners? Have you been delving into those FX waters? I know they can be a little bit intimidating at first, especially when you're looking at some of these, funky strike prices and all these funky ratios. And you have to think about two moving parts. At the end of the day, it is a currency pair, after all, listeners. If you're going to start things off, you got to start off in the big dog that Rich was just talking about. Of course, Euro USD, putting up some numbers this week. Again, a lot of people focused on trade war with EU as well as other countries, so makes some sense. We're seeing a little bit of action on the FX side in Euro USD this week. Over 150,000, 152,000 contracts on the tape for Euro USD. So a decent week, all things considered. And where was the lion's share of that paper? 27% of the paper going up this week. And the contract that has about 8 days to go. Makes sense to be a little bit more near dated. In fact, I'm surprised it's not even closer just because of everything we saw with these negotiations with the EU recently out there. A lot of that was near dated stuff. But that said, the hot option out here before we get there, let's break down some of the vol and everything else. As we all know, by the way, if you're wondering, where is the Euro USD, that pair hanging out right now? 1.14. Let's take it out to all the decimals, listeners. 1.14565, if that wasn't intimidating enough for you already out there. Giving up a little bit this week, off nearly 3% out there. Vol-wise, FX is not the home of volatility. It's not where you go for vol, unless you're talking yen unwind a year ago, yen carry trade unwind, or maybe the Swiss franc a few years ago. Then you see some pockets of vol. But outside of that, FX not the place you're going for vol. This pair hanging out right now with about 8 days to go, a little over an 8, about an 840. That said, gaining a vol point this week, that's a huge move when you're starting at about a 7.5 and gaining a point. That's a big vol move, something to keep an eye on out there. Skew-wise, again, not a lot of skew to write home about the puts. Last week, about 2% bid. This week, about 1.2% discounted. So kind of vacillating around the at-the-money, which is already a pretty low level. The calls last week, about 1% bid. This week, about 3.1% bid. So not huge moves there, but the 1.165 puts. Again, got to love these strikes out here, listeners. Lighting it up 5,500 times. That was the big dog out here this week, including about 4,700 of that going up today. So a very active strike today. Seems like folks might be bailing on these because it's 5,500 open on this strike. So folks could be giving up the ghost. I'm looking here for other trades today if there's any sort of vertical or ratio going up here. Doesn't seem like it. It seems like folks might just be bailing on these puts out here, which I went and looked while Rich was talking. And these are trading for a whopping 2 cents. So not getting a ton for these bad boys if you are indeed bailing on them. But interesting stuff. I don't know, Rich, roughly 8 day to go, 1.165 puts to be precise out there. Is that floating your boat? Would you like to take a roll of the dice for 2 cents, sir?
Now that we're getting past a lot of the catalysts, probably not. Probably not. I mean, obviously long options, buying some premium, you always want to see those catalysts, and it seems like we're getting past the tariff deadlines as we're getting signing some deals. I mean, past the FOMC. We've had a big macro data week here in the U.S. as well. We're towards the end of that. Of course, we've got the big number tomorrow, but I think we're running out of catalysts here, and we're staring the end of the summer right in the face.
Yeah, not much ahead of us. 8 days to go. You need something to happen to make that 2 cents sing, sir. It doesn't seem like we're right. We have the catalyst ahead of us. Also, not a lot of time ahead of us left on the show. We've been having fun, Rich. Time flies when you're talking metals and FX. You probably got time for one more complex. I'll let you choose where we go last, sir. What's catching your eye?
I mean, we just had the FOMC. We got to be talking rates, I would think.
All right, to the rates we go, listeners.
The Fed, the yield curve, inflation fears. How are they impacting options activity and volatility in your favorite interest rate products? Let's find out as we explore the world of rates.
All right, everybody, to the wonderful world of rates we go. Go into that drop down one more time. Pop out of the FX list, and you're going to go down just one slot. Interest rates kind of coming right between metals and FX, listeners. And you're going to go in U.S. rates in the product family. We're probably going to hang out in the 10-year. Maybe Rich can twist my arm to look at something else. But it does seem like the 10-year is the benchmark most people fixate on. It certainly is the king of the futures market in terms of volume, and definitely lighting up the tape on the futures options side as well. By the way, if you're intimidated, confused by all things 10-year, we did a deep dive into all things 10-year on the futures rundown yesterday with our buddy Dan the Man Gramza. If you were on the pro side, you heard it live yesterday. If you're waiting on the on-demand side, that will be hitting next week. So if you are intrigued by all things 10-year, then that's coming at you next week. Of course, if you want to get all that stuff earlier, all the other exclusive shows, and you want to get your name in the hat, clock's ticking for the giveaway for July, head on over to the pro, theoptionsinsider.com/pro is the place to go. But Rich, kind of an interesting week on the Fed side. Not really surprising anyone, I don't think, in terms of how they came down. Also not surprising, folks, that we got a few people auditioning to maybe be the next Fed chief, dissenting with the... It always is funny to me how the supposedly independent Fed suddenly gets political when the mood strikes them and when it behooves them to maybe audition for the role. So always kind of funny to me. But what were your thoughts on the Fed, what they ended up doing this week, and the market's response out there in the world of rates, sir?
Yeah, I mean, the whole idea that the Fed is independent, it never has been and never will be. It's too difficult. They're all political animals. They all live in D.C. and so yes, it was interesting to see the dissenters, like you said, auditioning for the role of Fed chair.
Just look, when's the last time the Fed actually raised rates right before they're set to be confirmed again? Has that ever happened in the history of time in the independent Fed?
No, not to my knowledge. Was I surprised by anything? No, I wasn't surprised by anything, and I think it was a little bit corroborated by the PCE data we got later today, which came after it. But the inflation is just not given any signal right now that we need lower rates. In fact, as Jay Powell said, there's still that risk of inflation reigniting. I think every Fed official looks at that picture of Arthur Burns from the 60s and 70s and does not want to be that person that starts to ease policy when it's kind of that mission accomplished banner. They start to ease policy, and all of a sudden inflation reignites, and we have a revisit of the 70s. And no one wants to do that, be that person. And the jobs numbers, we'll find out tomorrow. But we've got lots of other jobs data this week, from jobless claims to conference board data like jobs plentiful versus hard to get. We've had Challenger to jobs data. We had JOLTS jobs data. We've had tons of jobs data, which suggests the labor market's getting a little bit weaker, but it's just not that weak. And so there's, on the dual mandate, there's nothing to say the Fed should be cutting rates, other than the presidents and politicians telling them to cut rates. And so I think the market's starting to realize that we've seen rate cuts being priced out. I think now we're down to about 1.3 rate cuts by the end of this year. We were up closer to 3 a month or 6 weeks ago. So they're really pricing the rate cuts out in the front end, and I think that makes, to me, the 2 years an interesting play, because you've got all of the aggregate rate cut news, which is interesting. You've got now the stablecoin legislation, which is going to really be fixated some incremental demand on the front end of the curve. And then you got the fact that the Treasury sector is choosing to issue more in the bills versus the coupons further out in the curve. And so I think the front end of the curve certainly is getting a little bit more interesting. Like, to your point, the 10-year is the granddaddy of them all, but that front part of the curve is starting to look pretty interesting.
Well, if you want, we could slide into the 2 years. Some people don't get a chance to really do that here on the show. So why don't we defy expectations? What do you want, 2 year or 3 year? Pick now, Mr. Rich.
Why don't we say 2 year?
All right, let's go out to the 2 year listener, because you're right. We do 10-year all the time. Let's mix it up. Let's see. How does the 2 year compare to the 10-year from a volume perspective? Not favorably, because not much can really compare favorably to the 10-year, listeners. The 10-year putting up over 2 million contracts this week. 2 year, not quite there, but no slouch in its own right. 172,000 contracts on the tape. And for some of you out there, maybe it's easier to wrap your head around this maturity and this portion of the curve versus even 10 years. Even though it's middle of the curve, it's still, for a lot of people, kind of difficult to grasp the nuances there, let alone 30 years. So maybe 2 year is a better starter point for on the curve if you're looking to dip your toes in rates, even if not quite as liquid as the 10-year. 37% of that 170,000 contracts going up in our SEP contract. Has about 22 days to go. We're going to hang out there. By the way, the 2 year hanging out 103.15 today, listeners, off. Not really a big move, off about 0.1% on the week. So not a huge move out there in the 10-year, the 2 year. I have 10-year on the brain. Given the fact that we had the Fed this week. In terms of vol, the 2 year is not going to be the place you go for vol, and that is the case. This might be the lowest vol number we've profiled on the show, Rich. 1.5. Off 0.09. I don't know if I've ever traded a product with a 1 vol, Rich, so I might have to sling some 2 year just to add that to my list. What do you think?
Absolutely. Call the spread.
Wow, 1.5. That's getting pretty low. I don't know if I could sell a 1.5 vol, Rich.
Well, if it goes from 1.5 to 1.25, that's a pretty big percent.
Exactly. That's huge. That's huge. You're printing money out there. When vol is low, sometimes you want to sell it, listeners. It just does my old school market maker heart. It hurts it to sell a 1.5 vol in anything. Going out to the skew, such as it is, listeners. Getting a little bit of a bid to the upside. The calls were 8.2% Rich last week. This week, 12.5%. Now, again, you're starting from a baseline of 1.5, so read into that a little bit. But still interesting. The puts, nobody wants them. 11% discounted, down from 5.2% discounted last week out there, listeners. So interesting stuff. So Rich actually looks like a good setup for your 1x2 ratio collar, if you were so inclined. Getting a decent premium for the calls, and the puts are cheap. What do you think? 1x2 ratio collars in the 2 years, sir?
Yeah, I mean, I think it sounds like it could be pretty interesting, especially if you want to try to fade the move here a little bit. Like, you don't need a big move in the underlying when you're talking about getting net long some options on around a 1.5 vol. Any sort of move is going to help, but having traded some of these things, you could lose a lot of money being long 1.5 vol too. So gotta be careful of that.
I will say it is also pleasing to my old market maker heart to see things trading in eighths again, Rich. It brings a smile to the old face out there. We got 104 and an eighth calls lighting it up out here in September, listeners. Actually, not take it back. These are the Octobers. They have 60 days to go. That was our big dog out here this week, putting up 27,000. All of that in 2 days. So kind of wild. Not on Fed Day itself, but actually on Tuesday, 15,000 going up on Tuesday. Looks like it was actually a vertical. It was the 104 and an eighth, 104 and 3/8 vertical going up 15,000 times on Tuesday, all opening. And then that's what cracks me up about these products. They can put up size numbers one day and then literal goose eggs the next day, not even touch them. So nobody traded even a one lot on Fed Day yesterday, and then coming back today doing 12,000 of the 104 and an eighth calls again. So maybe they're bailing on one half of that spread out here, most of it. Maybe they're piling on. Either way, not doing both legs, just doing the one leg out here today, listeners, which is kind of interesting. Right behind it at number 2, we have the on 103 and 3/4 calls going up here. These are back in September. These were trading pretty actively all week long, about 9,100 times. No love today, which is interesting, but about 3,200 yesterday opening, 4,600 on Tuesday, so obviously bookending the Fed there, and about 1,200 on Monday. So interesting stuff, 103 and 3/4 calls, but these longer term, 104 and an eighth, kind of interesting. Like that vertical, listeners, 104 and an eighth, 104 and 3/8 vertical. Somebody did to the tune of 15,000 heading right on into the Fed. All right, well, that's going to do it for us on the old TWIFO program today. Mr. Rich, I'm glad you broke your 1-year hiatus with us on the show today. Glad you remembered how all it worked. But before we go, if there's any products we didn't hit on that you wanted to maybe mention really quickly, or if you wanted to leave our listeners with any hints, any categories, any complexes you're keeping an eye on, now is the time, sir. The floor is yours.
Yeah, I think the listeners, you'd be well served. We got a big catalyst coming up in a couple of weeks. August 12th is the next WASDE report. Ags have been super interesting. Corn's been absolutely under pressure. Soybeans have been rolling over as well. A lot of expectations of a huge yield this year. If that doesn't come through, I think you're going to see a little bit of scrambling. And so I think if you're looking for catalysts and something to trade, something to fade consensus, look for ags in a couple weeks when we get some USDA data.
And if folks want to check out your articles, or maybe they want to do a guided tour with you one of these days, Mr. Rich, where should they go? What should they do?
They can definitely find me on the CME website. I do the Excel with options is out there, and I also do an Excel with ag options if you're really looking to get into the ag options space. That's the number one place. Connect with me on LinkedIn, or you can find me on X at Excel Richard.
So you're trying to make FX options cool again, and there's no Excel with FX options? You're just ags? You want to make wheat cool again, sir? Those products are already cool, so I could slot into those. Okay.
I'm still trying to make FX cool again. I'm not quite there yet, but I'm gonna keep driving. I think there's enough going on that there's enough reasons why FX might be cool, because we're gonna get some trending moves.
All right, check them out, listeners. Excel with options. You know where to go. CMEGroup.com is the place to go. While you're there, make sure you're checking out our TWIFO reports. TWIFO is the place to go. And again, once you're there, there's an embarrassment of riches for stuff to check out. Not just our reports, but of course, our riches, Excel with options, a lot of great research, data, analysis, all sorts of fun education over there at CME. That's not going to do it for us on the network today. If you're hanging out in the live hangout, we'll be back in about an hour after the closing bell to break down all of the things lighting up the tape out there in the options market on the newest addition to the network, the Hot Options Report. So stay tuned for that, listeners. Then coming back tomorrow, noon Central, 1 p.m. Eastern, to talk all things vol with Dr. Vix and some special guests. And also, special guests joining me for a little bit of Options Oddities 200 tomorrow. Should be a fun time. If you feel like unusual activity, make sure you check it out. TheOptionsInsider.com/pro is the place to go to get your hands on that. Then we're back again one final time for the week, talking all things hot options with a little bit of Thor. Then we're back again pretty soon. Another great episode of This Week in Futures Options. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.